Welcome to the DL. This is the show where we talk about everything in the truck and equipment repair industry. It's my job to help inform and educate you on ways to help your business. We talk with technicians, business owners, associations, industry experts, manufacturers, and even a few you wouldn't think traditionally apply to your business. Welcome to the DL. I'm your host, Tyler Robertson. I am the CEO and founder of Diesel Laptops. And this is the podcast show where I get to talk about my two great passions. The two great passions I have are truck repair and entrepreneurship. I love growing a business. I love everything we do on the diesel diagnostic and repair side. So anytime I get to mash those two together, it's absolutely a great thing for me to talk about. And today we get to talk about my second least favorite subject, and that would be accounting. So with that great intro, Mike, welcome to the show. I got Mike McGovern here.
How you doing, Tyler? Yeah. I got to ask, what's the first least favorite?
By far, HR. I absolutely despise everything to do with HR, but I got a great HR department. I need to do an episode on that, really, because I got all kinds of great, horrendous HR stories to tell the public one of these days. But I think one of the other not so good stories at Diesel Laptops is, really how we got engaged with you guys. So just a recap for the audience that's not aware, we started small. I was in my garage, my dining room table, did a couple million in revenue the first year, then we doubled it, and then we doubled it again. And all of a sudden, we're having some cash flow issues, financing things. We really don't know what's going on because I pretty much had said screw it to having any kind of real accounting staff up until that point. So that's about 18-ish, I think.
2018, yeah, it was the first year we met, and from there it's one audit and 2 reviews later.
Yeah. So I think I want to tell a little bit of the story of what was really, really messed up on our part. When you got in here, we had monthly financials, and I think a lot of times people just look at maybe their cash, especially a small business, right? You kind of look at the cash in your bank account, you look at your sales numbers just skyrocketing, and then there's this whole balance sheet thing that we pretty much ignored at the start.
Sure. Yeah. So, I think I would look at you as a typical entrepreneur. As a matter of fact, I think I referred to you as, at that point in time, a multi-million-dollar startup. Because you guys had already reached a lot in terms of revenue growth and things like that. But your accounting department was very similar to what you would see in a normal entrepreneurial startup, where, like you said, cash is king, right? If you had cash in the account and your sales were going the right way, you're golden. Yeah. But the reality is, you hit that spot where, if you didn't understand the rest of the balance sheet, you could do like several businesses have done in the past, or actually multiple businesses have done in the past, and be growing yourself right out of business because you're not profitable as like you think, or other reasons.
Well, let's talk about that for a second, because that first year you did the audit, I got my monthly financials, things are looking good. I remember you're coming in and you're like, all right, Tyler, hope you're sitting down because we got a 7-figure plus adjustment to make here to your income statement. But you're like, don't worry, it doesn't affect cash. Right. So I don't know if you remember some of those things that we were doing wrong or any of the particular details of that. But when I say we had to make a 7-figure adjustment to our income statement to do some things on the balance sheet, can you explain a little bit of what we kind of went through?
Sure. And I'll jump into technical for just a second. So from an accounting standpoint, there's this thing called accrual accounting, right? You can either be accrual basis or cash basis. And what people consider generally accepted accounting principles, being U.S. GAAP, is an accrual basis. And so I think that's where a lot of the entrepreneurs have to educate themselves, as well as work with people who can help them educate themselves on understanding what that means. So in simplest terms, that means that you put things on the balance sheet, or you recognize income and expenses when they're earned or incurred versus when the cash comes in the door or you record a sale. So in your case, you have multi-year contracts and things like that. So, if you go out and invoice a customer, let's just say you got really good and your diagnostic tool is selling for $1 million, and you invoice a customer $1 million, but it's for a 10-year contract. In simplest terms, you don't get to recognize the whole $10 million up front. The $10 million has to be spread out over the performance period.
Yeah.
You got performance obligations to fulfill. And so from a GAAP standpoint, in terms of how you're really doing, you have to kind of step away from the cash mentality a little bit, which is very hard to do, and into the mentality of, okay, where do I really stand? If I look at the big picture and take a snapshot, where do I stand?
Yeah, and I think what happened is you walked in here, we had sold thousands of laptop kits. We had claimed all that revenue when it happened. You're like, but wait, you guys support these for like the whole year. You can't just take all the money today, and then we have this trade-in thing. Essentially, you buy these renewals, and we take your old laptop back and swap it with a new one. And there was a lot of complexity. We were just kind of like, I guess we should have thought about that a little bit more, or engage with somebody possibly. Do you see that a lot at other companies that are in that stage?
In the early stages in particular, yes, we do. We definitely do, especially first time through a review or an audit when you really get in deeper. A lot of times we'll advise cash basis for startups and things like that until they get to this point where this stuff matters.
Yeah.
Because that's how you've got to manage what you can. You've got limited resources in-house as well. And so that might be something we talk about in a few minutes. But, when you're kind of a small startup in the garage, checkbook accounting may work. But then you get to a point where you're like, okay, when we're getting big enough where this stuff matters, and that's when you have to kind of start looking at different eyes.
Yeah, and I think one of the things I skipped over here in the beginning is exactly who your firm is, right? So Bauknight, Pietras Stormer, you're obviously our CPA that works with us. We work with some of your staff over there as well. Can you just kind of outlay, who do you guys work with? Is it small companies, mega companies? Like, explain your customer base a little bit.
Okay, I'll give you the 30-second infomercial.
Yeah,
So we were started in 1991. I think right now we're the largest firm based in Columbia, South Carolina. We've got about 85 employees total, and we deal primarily with non-public companies. We also deal with, I would tell you anything from the startups up through basically point of sale to private equity groups and sometimes public companies. So that's our kind of our sweet spot. In addition to kind of the traditional businesses like yourself, we also deal with a lot of captive insurance companies. We do a lot of them are domiciled out of Charleston, South Carolina, and we do a lot of telecommunications work. So we work with telecommunications accounting.
So I mean, obviously you serve all industries, and I got to imagine our story's not too terribly different. All right, I'm an entrepreneur. I'm a guy with an idea and want to go sell some stuff.
Right.
And typically running a business, you got to be HR, you got to be accounting, you got to be sales, tech support, customer service, all these things. And most people I know that run truck repair shops, they used to be diesel technicians, right? Or they run a mobile maintenance operation, and now all of a sudden they're a business owner, and it's a little bit of a different set of game and knowledge set that you need. So if anyone's listened to this and they're just starting out in business, or they got a handful of employees, is there some like basic 101 stuff that every company, even small ones, should be doing?
I think the answer is yes. I mean, the kind of the low-hanging fruit, is what I would tell you to go for. And in the case of accounting and even HR and everything else, I think the biggest thing you can do is get your hands on it early. You may not have the knowledge of a CPA or the knowledge of an HR expert, but there's some kind of common sense steps that can be taken that are maybe not natural for entrepreneurs to do because they, like I said, they're focused on growth and things like that. But just basic good record keeping, number one. Just keeping your records in order. Keeping copies of invoices, copies of bills, copies of checks. Looking at your bank statement every month, making sure there's nothing goofy there. And most of the time, the first year or two, you're going to be doing that stuff yourself, or a spouse is going to help you, or a friend, or something like that. But I would tell you just the good basic, clean set of records to start from. Is where you do, and then when you get that next phase, where you've got you've got somebody else who comes in to help you, whether it's part-time accountant, off-site, an outside firm or whatever. I think it's real important to ask questions. Look at bank statements, look behind the detail. If you got, I might be jumping a little bit deeper than you want to go here, but for example, accounts receivable ledgers. You've gone out and had all these sales. Well, when's the last time, when you're in your second year of operations, did you go in and look at the detail of, okay, hey, you know what, I got 2/3 of my accounts receivable are over 90 days. That's, you start scratching your head. How collectible are those?
So I'll tell our story on receivables. And I worked for my family forever before doing this, and then they may say they're good at receivables. They're not. Give my dad a little shit here, but at the end of the day, I knew going into this, I was like, okay, I gotta keep my eye on receivables. I know this is important. I can't let this get out ahead of me at all. Basically, trust no one. I'm going to run a cash-only business, right? Sounds like I'm a drug lord or something. But I was like, cash is king. I need the cash to keep growing here. And I don't know how it happened, but all of a sudden I woke up one day and people owed me $2 million, and I didn't have anywhere near that in my bank account, and I had bills due. Like, do you see that a lot with companies that are growing, just outrunning their cash because they're not taking care of the backside?
Yeah, no doubt. Because I think that that's a... I think it's a common issue that's out there, and I'll tell you the same thing with bank reconciliations, for example. what people use QuickBooks. It's it's a great tool.
We use it here still. Yeah.
Still, yeah, that's right. You're probably one of the larger. I've got 3 or 4 your size that still do.
Yeah.
For various reasons, but yeah. So what happens is QuickBooks, when you go through and you say you reconcile account, you push the button and it comes back and says reconciled. You're like, great, cash is reconciled. But the reality is, if you go into the detail, you may have outstanding deposits and checks and things that never cleared for various reasons over the years that really need to be cleaned up and addressed. And you may have a lot more cash or a lot less cash than you thought. And receivables is the same thing. I think people forget. The tendency is you call a customer and they say, yeah, they're going to pay you in 30 days. Well, then you put that on the list. Okay, they'll pay me in 30 days. I'll follow in 30 days. Well, 30 becomes 60, becomes 90, becomes 120, and then they hit cash flow issues. And, then you got to deal with, taking the hit because you've already sold the product. You can't get it back at full value, and it's expensive.
So, our story here is we pretty much brought you guys in. We're, like you said, 2018. At that point, we had probably done a total of 40 or 50 million sales. You combine up all the years. And we basically needed to have a balance sheet audit done. We're trying to clean things up. We knew we had a problem there. And you come in there, and it wasn't a quick process at all, because my understanding was you guys had to go back to day one and try to figure out this mess that we built.
Yeah, it was a little bit of a spider web. But yeah, I think fortunately for you had good staff with good attitudes. I can tell you that I probably would have quit after month 2 if I was on a job.
Yeah.
But no, it's definitely more intense. And frankly, your company, even at that size, it's pretty complex from an accounting standpoint. If you think about it, you have software, you've got multiple deliverable contracts, right? So you've got, it's not like you're just selling widgets. It's not like you're just manufacturing widgets.
It's a 3-year package, 5-year
package.
package.
You've got packages, software, hardware, service. You buy stuff you were selling online, some off through third parties. So you've got all that as well as the traditional accounting that you're trying to deal with.
And then we had money kind of coming in through PayPal and Stripe and bank accounts and credit. We had 3 or 4 credit card processors, and it got complicated quick. And that's when we started figuring out. I remember sitting in Laura's office, because Laura was here at that point. And she had this big whiteboard with all these arrows, and she's just trying to map out how the money flows from all these different sources. And it's a tough thing to do. And even this week, it happened to us again. We kind of got everything smooth, going well. We're down to a 10-day soft close now, which is great, because it used to take us. Well, it took us a year there at one point. We'll talk about that in a second. But we finally got that all down there and everything. And she had to come back and say, we switched our one of our subsystems somewhere in this whole thing. We switched, and she said when we did that, it broke. All the fees were absorbing on eBay, and it was putting them into this other balance sheet account that was kind of not much, and it was growing every month. So we finally took a look at it, and she's like, well, now we got to take a $25,000 or $40,000 hit because I'm dealing with 6 months of expense. So those things kind of keep coming up as you make one little change somewhere. It's like the ripple effect that happens on the accounting side.
No, there's going to be, and that's going to continue. You'll see that all the way up. You're going to push the bubble in one spot, and all of a sudden it pops out somewhere else.
Yeah,
that's going to keep going.
Well, going back to that audit you guys did for us, and again, this was no your fault. It's our fault for creating a mess here. But it took a while to do that, because it was it felt almost like kicking over a rock. You kick it over, and all of a sudden you're like, wow, what's that? You just keep digging deeper and deeper, and yeah.
In full disclosure, Tyler, there were many times where I thought you were going to just pull the plug and say, Mike, you're a nice guy, but go away. But no, there's no doubt, because and let's go back to the conversation we were having earlier about startups. Your QuickBooks was set up, it was set up by one person, and then you had multiple people with access to it, and as you thought you needed something, or somebody thought they needed something, they added it, or they changed it. And so as a result of that, you were starting off with an accounting system that had been kind of pieced together by different people, I don't think any of which at that point were degreed accountants. And as a result, it had gotten into a little bit of a web. And to unravel that, that's when you get into the things we were talking about, you and I talking about earlier, about the fact that you have these multi-year contracts with all these different things. To go through and try to figure out what packages you sold to what customers and things like that. Thank goodness for Riley and some of your historical knowledge that you had. Because there was a point there where we didn't even know if we could get there with the information. It truly was, it was a lot of work. And but fortunately, you had good staff who, again, I think most of them are still here.
Yeah.
Yeah. Who, who had good attitudes, and I think it was a good learning process for you and them as well as us as to how this all comes together. So.
Yeah. There was just a photo that one of our employees put on Facebook. It was like from 3 years ago, I think it was. Maybe it was 4. But it was like the first original 20 employees, and we all took the day off to go to the escape room and do those, and shut the business down. Can't quite do that anymore, but they were counting. They're like, there's 11 people are still here, and people move on and off companies for various reasons. But yeah, they're still around for a lot of that. So I just remember that process. It was taken forever, and I look back on it now, and when I first started the business, I was like, CPAs, they're gonna make me do all these things and charge all this money. I don't need this, blah blah blah.
And we probably did the first two.
Yeah, but in hindsight, if I would have started that process earlier and had a relationship going with someone, maybe not like day one, I don't need a full sheet balance audit, but at least get someone in my corner that can just give me the 101, like, let's just look at this real quick for you, Tyler, and tell you some basic stuff you're gonna need here. Would have been very helpful. And then the other part of it was I didn't realize you guys could actually save me money. So like the R&D tax credit, right? I had no idea that even existed. So I don't even know how much we made off that R&D tax credit. Do you remember the number at all?
I don't remember. I think it was definitely north of the 6 figures or whatever.
Yeah, it was a big thing we got back. But I think that's what people don't realize is you actually are there to help save and manage your business, and it's an important cornerstone of their business.
Right, and I like to look at it. I mean, it's an overused term, but most trusted business advisor. I mean, that's what we want to be.
Yeah.
As I'm on the A&A side, the audit and accounting side, attestation, and that's not always looked at as a good thing from the standpoint of, even if you like the auditor, at the end of the day, they're coming in, they're looking at records, they're asking your people to do things that they're out of their day job. And it's a lot of time commitment, a lot of work, but ultimately there are things that we're looking for to try to help you. A prime example, that's 2018. Part of what you wanted, I don't know if you knew it at the time,
yeah,
but part of what you wanted was was the feedback on the accounting system. And so I don't know if you remember the management letter that we issued, but part of what we do as part of an audit is we're required to communicate internal control deficiencies. And I think we had, I hope you don't mind me saying this, but I think we had a book in year 1. We could have written a test paper on that.
It was really funny because I got it like, oh, cool, they audited us, they found all these things, and I showed it. Now we do have some people here with accounting knowledge and all that stuff. I'm like, oh yeah, we got a balance sheet done. And they looked at it like, Todd, this is horrible. You're missing all these controls and all these things, and I think part of what we need to talk about too is we did a review. And then there's like the whole audit side, right? So we did a balance sheet only audit essentially,
right.
And we've only done reviews with you since then. Can you just like break it down for the audience, like what difference between a review and an audit?
Okay, sure. And so there's basically 3 levels of service that are provided for financial statements, and I'll give you the Reader's Digest version of that: compilation, review, and an audit. A compilation is the basics. Compilation is no assurance. Compilation means you give me your data and you say, Mike, make this look like a financial statement.
Yeah.
And that's what I do. And unless there's something in there that leads me to believe there's something that's absolutely materially misstated, I take what you give me and I turn around and I give you compiled financial statements back. Okay.
Yeah.
Second level is a review. A review is called limited assurance. A review means that in addition to helping with financial statements, and really technically preparation is a separate service. If I'm preparing your financial statements, the reality is that's a separate service. But so we, in your case, we prepare the financial statements, to save Michelle some typing and headache of going through footnotes and all that.
Yep.
And then we do a review on it. And a review consists primarily of inquiries and analytical procedures. So in a review, I'm going to ask you about subsequent events. I'm going to ask you, hey, what happened to your margins here? Or why is cash down? Everything else points to it being up, and that kind of stuff. And we're going to look at your days sales, AR, and things like that. And it's going to be, as it says, limited assurance, because we're not going in and testing that unless there's a reason to. And then finally is the audit. And you guys had asked us to do an audit in 2018 because you knew you needed a good stake in the sand to move forward.
Yep.
And so in 2018 we did a balance sheet audit, as we talked about earlier, and that's full blown looking at things. And instead of me just going in and saying, hey Tyler, what happened with cash? I'm going to go in and I'm going to review your bank statements, your bank reconciliations, and things like that, and get some outside verification where we can, or we're going to go in and just basically test behind you and your accounting staff to make sure that we can give a reasonable basis for an opinion that says, hey, we've tested it, your financial statements are materially correct.
So when you do these things, is there a little bit of liability on your guys' side? Because I know you guys are signing these things and making certain statements in there. What's going on there?
In terms of the liability, love to tell you that there's a reason that we give you a 7-page engagement letter that used to be a 3-pager when I started.
Yeah.
It's like every time the attorneys have another problem, they add another page. But no, so there is definitely liability, because at the end of the day, we're subject to professional standards, right? With we got our auditing standards, and we've got our accounting standards, and so we're bound by those to make sure that we've done what a reasonable person would do to issue an opinion. So there is liability, or hopefully potential liability. Associated with doing services. Confirmation obviously is probably less of a chance, and review maybe less of a chance. But when you get into an audit, at the end of the day, I've got to consider who's relying on these financial statements. If you've got a bank that's loaning you money, and I go out there and I don't test your inventory, and your inventory doesn't exist because you have somebody back up a truck and to take it off and sell it for scrap. And I haven't done what I'm supposed to do to test to make sure it's there. Same thing with receivables. If receivables aren't collectible, but I don't go in and I don't test for subsequent collections to make sure receivables are there. Well, then your bank goes out and makes you a loan based on financial statements that aren't right. Most likely you're not going to have the money to pay the bank back, and it makes me looking for the next guy in line.
I think that's what I've learned too as my business has grown. It's not just like what's on paper, but it's like you talked about, asking the questions to make sure the business is properly protected and de-risked enough and set up for success. So that's the part I've enjoyed. It's not just, here's your numbers, Tyler, you're good or you're bad. It's, tell me why their gross margins are going down here. Tell me why these inventory numbers are spiking. Tell me, so you ask us the right questions, which gets us in the right mindset of doing those things. So it's, I think at any point, no matter what size business, you need to find that a trusted partner, like you said.
No, that's exactly right. And I think in your case, I'm pretty sure in year one, your appreciation of us asking the questions and things like that, you're like, I remember you saying, what's GAAP, right?
yeah. What do I care about this?
Deferred revenue. I don't care. I got cash in the bank. Yeah. Well, I think as we've grown to learn more about each other, I've seen your business knowledge and your knowledge of accounting and things like that grow as well. And I think you've also surrounded yourself with good people. And I think that combination is what you need to springboard into the next level of business. And so, it's been kind of a fun experience to watch from the outside.
Yeah.
These last 3 years.
So I know we did a review with you, or I'm sorry, it was basically the balance sheet audit with you the first year. Second year, basically my whole entire accounting department kind of got turned over. So we were like, okay, we can't do this.
But it didn't take as long as the audit.
It didn't take as long as the audit. Well, then we had to get the new person in here and basically restaff and do everything right. And she just looked at the first audit we did, and she's like, we're gonna fail again, so I need a year here to get this right. And she goes, I will pass this audit with flying colors. So Michelle threw the challenge flag down for 2021 to have a cleanest audit possible. Is what she said.
Great, but that's also a good point too. Is 2018 an audit made perfectly good sense for you. I mean, you needed that. That
banks were starting to ask for it too, right? Like, we want bigger credit lines, exactly. And do you have audited financials? Like, no, we got QuickBooks here, and they're kind of like, you guys need to move it up your game.
Yeah. So as I was going to say, there's multiple reasons to have an audit, right? Yeah. One is if you're looking at if you got investors, whether it's family, friends, outside investors, whatever. A lot of times you're accountable to them. Number two is the financing institutions and things like that. And then number three is a lot of our clients get them because they just want to know that
peace
they've
of
got
mind.
Good screen. They trust their accounting staff. They hope they've got good internal controls, but they want a little bit of a scrubbing.
Yeah.
So there's multiple reasons. And in year 2 and 3, when we did the review, we had multiple conversations about whether or not you want an audit or review. I think in both years. And there's cost-benefit decisions too, right? I mean, what are you going to get out of it if Michelle tells you that numbers aren't really, that we think we're good for a review, we think the numbers are right, but to substantiate some of that might be a challenge because of the turnover in accounting and records and things like that. Well, then why spend the money on an audit? Let's get a review and get you the level of service that you need. Yeah. So. Yeah.
No, I think, and we're at the point now where, hey, we need to do annual audits. It's just we're at that point, and the revenue is still doing what it's doing, and we keep adding people. And I can tell you there's another reason to get an audit done. This one hit us out of left field. So we rented a facility in Dallas, Texas. We do our one-day training courses there, and we wanted to launch in partnership with American Diesel Training Centers, where they bring their instructor in, they find a bunch of underemployed people,
Right.
and they bring them in there and go through a 300-hour program, and they turn them into diesel techs. So we had to apply for like an educational license with the state of Texas. Got denied because they said, because you are, if you're an LLC, you don't need any kind of audited financials or anything. But if you're any kind of formal S Corp, C Corp, all those other things, you have to have audited financials from the previous year in order to get approved for a educational license in the state of
Which
Texas.
makes about 0 cents.
It makes 0 cents. And we tried to argue that, and they're like, well, what if we just go start up another LLC for just training? They're like, yeah, you can do that. We're like, this is just bizarre. And I get it. I think they're trying to protect like the scammy educational companies that come in and just take student loan money and run off to the hills and provide no value to people. But again, that's lawmakers in general, I guess, right?
Yeah, and like you said, I mean, you don't ever know when that's going to come up. But in that case, that's one of those ones where I'm assuming you found a way around it, right? So,
no, we waited. Yeah,
okay.
So you're getting a hint that we are definitely going to do an audit next year for 2021, because we have to have it for that. And it just we're at the point now too. It's just one of those things that we got to rubber stamp every year and know we're in the right direction. Like I said, you guys have saved me a ton of money over the years. You guys have helped us as a company, not just here's doing the work, but actually being there and saying, hey, we got some insight for you guys. And it's actually spookily eerie because every time you bring up something, we're all hanging our heads like, yeah, we know that's a problem. So it's good to see that flows through the accounting side.
Yeah, and again, I mean, there's no doubt that there's nothing like feeling like sometimes you're the bearer of bad news. Just like, okay, I'm supposed to be developing a good relationship and helping you move forward. But sometimes that involves calling things to your attention, and at the end of the day, we got to call it like we see it because we're not helping you if we don't. So.
Yeah. All right. So, any last words of advice for any business owners out there? If they're struggling, or their numbers aren't right, or they're scratching their head, or they're just drowning in everything. Any advice you give them in general?
I think a couple things. One would be see if you can find a mentor. I think there's a lot of people who've been through it before, as Tyler's saying now, and I think you're very kind to take and share this kind of a story with your audience. So find a mentor and find a good group of people that you trust who can help guide you through it. Don't feel like you have to do it on your own, number one, and then number two, obviously, don't wait too long. I mean, the CPA world is, you can certainly start with a low cost solution and things like that, but don't wait too long to pull the trigger on that next step of, okay, hey, as you did in 2018, let's see where we really are. Because if you don't have good financial records, at the end of the day, you can make some really bad decisions.
Yeah. Yeah, and I think the other point of that too is I know, my migration was I had like my local tax guy that was helping me, and I've seen people try to use, H&R Block, and they're putting their business stuff in there and trying to do all kinds of weird stuff that's just not good at the end of the day. So just do it right, and I think you said it right. Find trusted partners, find mentorships, or there's those kinds of organizations around and everything. So your clients, is it only people in the Midlands area you guys are helping, or is it regional, countrywide?
I would tell you that it's primarily in the South Carolina market. Obviously the chunk of it's in Columbia, but we serve the whole state. We serve some in North Carolina, Georgia, that way as well. And then, but that doesn't make us shy away from other states as well, particularly in like the telecom world or the captive insurance world. We've got clients nationwide in those, and then we also deal with a lot of companies here locally that are foreign owned. So we also deal with some of the foreign owned investments as well.
Yep. So. Well, if someone wants to get a hold of you, is it LinkedIn, website? What's the best way to get a hold of you if they got some questions or follow-ups?
I would tell you website's probably the easiest. I mean, LinkedIn is good as well. And then, if you follow the website, there's all the contact information there for myself as well as, I think all 80 employees.
Yeah. So. Well, like I'll tell everyone, good accounting isn't cheap and cheap accounting isn't good, right? So you need to have, I'm not saying you guys are expensive or anything, but you want to have the right level of knowledge and professionalism to help your business depending on what stage of growth you're in and all those things.
Right, and I think that some of that you'll know whether it's the right fit. I mean, I think as that relationship develops, I think you can figure out pretty quickly whether or not this is who I want on my team, and it goes both ways. And so I think that's something to pay attention to.
So I would say if anyone's listening to this and they can't have a conversation like this with their CPA, they probably have the wrong CPA, and they need to find someone that can engage with them.
I think that's true, and certainly I appreciate you giving us the opportunity to come on board today and talk with you, and hopefully get some information out there for your audience.
Cool. Awesome. Well, we're going to call it an episode. Mike, thank you very much for coming on, talking to us a little bit. Again, my second least favorite subject. I got to do an HR one now, just so I can drive that point home.
Fair play.
But they definitely help us out. Hopefully you got a little bit out of this. And like we end every episode, it's not just diagnostics, it's diagnostics done right, and you need to have a great CPA in your corner to help you do it.
All right.
Thank you much,
Thanks,
everyone.
Don.